Jay, would you copy Heloise? Heloise, would you copy Jaynemesis?
I think dividend cuts were kind of at a low in May, and we can expect to see some of the dividend growth to resume in 2021 as the vaccine distribution gets a bit more, through the channels and gives a bit more clarity to company management.
But again, I think there's better investments in that space as well, based on valuation. It's definitely hit that point of being just probably the world's biggest hype stock now. And again, I'm not saying that Tesla is going to go bankrupt or Tesla is going to do badly. Tesla is clearly going to do well and take a large chunk of the market as the EV share continues to increase. But realistically, I think that in terms of the upside potential and also the downside risk, there's much better that you can find by looking at companies like Volkswagen or Ford or General Motors. Honestly, pretty much any other auto company.
Or I was actually thinking that the scale of the money that he has, so 1% to him might be a whole portfolio size already to a certain person. That's why I think he could do that much. That's how I think I look at it. I'm curious at this. I don't know if you guys want to answer this, but would you say proper diversification would be they would buy one ETF, probably tracking the S&P 500, then probably they'd buy Bitcoin to track something, then maybe Apple or whatever, any FANG stock, then they just copy both of you. Would that be a good mix?
Yeah, I think I always tell people who copy me that, whatever they're copying me with, and even being on eToro, should be only one part of their whatever else their portfolio is, whether you're invested in the property market or whether you're invested in a business. So Jay and I both did a commentary for Bloomberg just this past week about Bitcoin, and my point in that is Bitcoin is not in my portfolio, but by all means, if you want to have Bitcoin on the side, that should be encouraged for people to do. I think having a few things on the side is probably not a bad thing.
Got it. So for example, Apple, S&P 500, Bitcoin, Heloise, Jaynemesis. Is that a good mix, Jay?
You've got it all figured out, haven't you, Marvin?
I mean, I've already got Apple in my portfolio, so you'll be doubling up.
I also have Apple. So.
Okay.
Then you have the S&P 500.
We might be overexposed to Apple, is what I'm thinking.
Okay.
Yeah, I always tell my copiers that that I believe pretty firmly in diversifying. There are all sorts of different traders and investors on eToro. There are people who are, buy and hold, and they do 10 trades a year and are incredibly successful, beat the S&P or beat the NASDAQ or whatever benchmark they have. People who invest in different geographies and different sectors, people who trade cryptocurrencies or Forex markets, there's people that do everything. And I don't. So I always encourage people to diversify and invest in a well-diversified portfolio across different sectors and different types of traders and short-term, long-term stock markets, cash, bonds, whatever, your grandma's car, whatever you feel like is gonna help you diversify. Artwork, just. The more you do, I think the better, especially the more wealth you have, I think the more important it becomes to protect it as well. So
somehow, some way, we all grew in terms of the knowledge of trading. Is there any technique, strategy, idea that you developed this year? What would it be and why? Or is there something that you stopped using? So for example, just to give context, I like moving averages, but somehow I don't like it anymore. I'll just draw my own support and resistance. Or I used to have a 50-day moving average. Now I'm just going to use a 20-day moving average, something like that.
Yeah, I mean, I'm trying to think of anything that I've really changed. and I can't really think of anything. You know, I still am a firm believer in listening to earnings calls as much as you can. Still a firm believer in, you know, fundamentals first, before technicals, before anything else. Fundamentals are just the most important thing to get right before you consider entering a position. Yeah, I can't really think of anything that's changed, to be honest. It's served me pretty well this year, so I'm hesitant to try and change anything. You know, yeah, there's nothing else I can add to that, really. I'm pretty happy with how things are working the way I'm investing at the moment. So.
That's why the rich get richer. Okay, Heloise.
Yeah, I think I'm the same as Jay. I think if anything this year, I've just reaffirmed how important it is to stick to your strategy and to be disciplined, because the stock market is very much driven by people's emotion, and if we can easily get, you know, swept away by that emotion. And yeah, this year I don't think there's anything that I would change except be more disciplined, and that we talked about when I met with you last time was one of my early learnings in the stock market, and this year has just reaffirmed that again as something which is important, to stick to your strategy and to be disciplined. And yeah, I think other than that, there's nothing that I would change.
Got it. Now, this is something that's very interesting, and I'm sure everyone watching this would want to know this. This is for Jay first. Jay, would you copy Heloise? Yes or no, and why?
Yeah, I probably would, to be honest. I actually, so I saw this question written down just now, just before we jumped on this call. So I quickly looked at Heloise's portfolio, and yeah, I think I probably would. The main thing that I really noticed when looking at this is really weird, by the way, just kind of like talking to you about your portfolio. The thing I noticed was that you've essentially got the same performance as the Nasdaq over the past 3-4 years, with less risk and less drawdown. So why wouldn't you? You know, if that's the benchmark that you're going for, I'm not sure if it is or if it's not, or if you're just, you know, trying to conservatively make profits and it happens to be lined up roughly with the same gains as the Nasdaq. Yeah, I think when you look at the diversification, I think it's a pretty good deal.
Got it. Heloise, this is directed for you, and this is of epic proportions also.
Whether I
would you copy JayNemsis? Why or why not?
Yes, I would. I think for the same reason, but slightly different, I would copy Jay, and I have actually recommended to people who copy me to also like consider him, as there are a few people who I consider. And one of the things I like about Jay specifically is, I think, you know, he speaks very honestly about his learnings from 2018, and I think, like, for somebody to be able to be honest about what they've done wrong and to come back and, you know, it could have turned out very differently for him, but I think he took a very humble approach and came back and changed his strategy and speaks very openly about that, which is something that I really value, because when I want to invest in somebody more than their performance, I'm investing in the person. And I think that's something which I really respect about Jay, not just because he's sitting in front of me, but I've said this to many people about him. So yeah, for that reason, I would totally invest in him. And then also he's much more, he takes a lot more risk than me, so I would probably get a lot more exposure than I do on my own portfolio.
Got it. And I don't understand why, when it comes to the markets, a lot of people would say that they never have losses, but that never happens. Anytime you invest in the markets, there will always be losses. I've never met anyone who's at least honest enough to say that there were portions that you'd either have to cut loss or have to hold on believing in a company even though the stock is going down, and losses are always part of it. I don't know why people glamorize always winning all the time, but part of winning, you always make losses as part of that. That's where you get better. That's where you also get more ideas, so you get to trade. Speaking of mistakes, is there any investing mistake that you'd like to share for 2020? Anything that you will never forget? It's not about the percentage of the loss, but something that you might have skipped a step on your plan, or you might have rushed it, or you became greedy a bit. Maybe Heloise, then Jay.
Yeah, I think for me, I wouldn't necessarily call it a mistake, but maybe a regret. And this is always the thing with hindsight is that you can be a bit more critical about what you miss. I was quite reluctant and conservative to get back into the stock market in like March. And I think because of that, yeah, I did. My portfolio still did great this year, but yeah, it's not really a mistake. I always say you can't time the stock market, but this is probably a good point where I should have perhaps been a bit more, open to taking some risk. But yeah, I stuck to my strategy, so it's not really a mistake in my view. But it's a good time to stop and maybe reevaluate the strategy and reevaluate how we make decisions
Got it.
in the moment.
Got it. Before I go to Jay, this is what's so interesting. Here in the Philippines, I've also been interviewing CEOs of listed companies here, and this is what they've always been saying over and over. It's been like a template that has been done by a lot of people who are good in business. They would always say this: maximum risk, maximum possible upside. But when you're in the heat of the moment, that everything feels so risky, it doesn't feel that way. That you want to put everything when everything is so scary. But yeah, at the point when everything is so scary, I guess that's what would give you the possibility of bigger upside. So, Jay?
I would say that my mistakes are pretty glaring. To me at least. Maybe I don't know if anyone else noticed it, but during that correction, mine's from the same period, right? So when the stock markets were bottoming out, and I was really overly hesitant to close my hedges and close my short positions, and to switch long. And I got greedy on the downside, and I got greedy on the upside as it kind of bounced around the bottom. And I started over trading it a little bit. And I'd made enough against the benchmarks from shorting that downturn that it didn't really matter, but it mattered to me. I could see that I was I looked back a week later and I was like, what was I doing? I was doing, like, changing my mind in the same day like 3 times. So it was clear that potentially I was just a bit too absorbed in what was going on, and sometimes one of the best things you can do when you're trading is to do nothing. So I think I should have done that for a bit longer.
Great. Amazing. I was looking at your portfolio again while you guys were talking, and I just want to ask one particular stock from each of your portfolios. For Heloise, your largest allocation is Amazon. For those watching, can you explain why? And also for Jay, I'll ask the same question. Your largest position right now, and I know you've been pretty open about this, is AMD, and you have a detailed description on that. But I'll also ask the rationale behind it. So, Heloise, Amazon.
Amazon is somewhat undervalued right now, and partly because the reason I've invested in it so much is because with the shift that we've seen in the consumer way that consumers interact, it comes back to Jay's earlier point about people going back to the high street, at least like in the UK, and I think in a lot of other countries, even when the lockdowns were lifted, we're just not seeing the same footfall or people rushing back to the high streets. People have just kind of been forced online, and they have either liked it or they now feel comfortable with it. So yeah, that's one of the reasons I have stayed quite heavily invested in Amazon.
Speaking of shopping in London, I'm a Primark type of person. So when my wife goes there, just buy. It's okay. Don't go to those expensive places. But anyways, Jay.
Yeah, AMD. Where do I start? I've had a beautiful relationship with the AMD over the past 3 years. It's my little baby. A lot of my copiers joke about the fact that you can never have enough AMD in your portfolio. Yeah, I keep trying to talk myself out of AMD, and I just can't. There's so much going for it. Intel has really stagnated over the past decade. Essentially, they've been stuck on the same technology for a very long time. They've actually been selling off other parts of their business where they've tried to diversify to focus on that core. There's all sorts of political infighting going on, trying to wrestle for control of the company, and the product has suffered. And AMD has done the complete opposite. Lisa Su came in a pretty long time ago now and totally reinvigorated the company and switched direction. They went with a totally unique, innovative kind of solution for their chips, and it's just it's blown away the competition. The post that's on my feed is if anyone's kind of interested in investing in the chip space, I recommend reading it. Is about the upcoming disruption, and we've seen that with Apple with their M1 chips, and Microsoft recently announced they're going away from Intel as well. They're building chips based on ARM architecture as well. So there's an awful lot going on in the space. I think AMD is well positioned to continue growing and mainly eating out of Intel's market. But the space generally is just fascinating at the moment. There's so much going on in terms of the actual underlying technology. So if you're someone that can kind of get your head around the technology, it's well worth investigating, because I think there is a lot of potential and a lot of companies in this space, not just AMD.
Got it. Or guys, what Heloise and Jay said takes a lot of research. If you want to skip all of that research, just copy them and simplify your life. so while you were saying that, there are a lot of people watching this that may not be techie, and they call this term in the Philippines nosebleed. That while you're saying something that they don't understand, their nose just bleeds. So if you want to prevent nosebleed, just copy them all together. Anyways.
That was the simplified version.
Got it. But yeah, it's so interesting. Yeah, like what you said, everyone's shifting away from Intel, and Intel is something that we all grew up with. Every CPU had the sticker Intel inside, but now you've seen it start to shift altogether.
I think they're going to continue to consolidate and then push higher. I think 2021 looks really, really optimistic for Bitcoin. You're seeing an increasing number of companies use Bitcoin as part of their balance sheet to help control currency risk. Why would you hold US dollars or euros or something like that when you can hold something that doesn't have that same level of inflation?